Hey everybody, let's get ready for a Wednesday night podcast. We're going to talk stocks, and we're also going to talk about it in podcast form. I'm not going to really be as technical as I've been recently about what this algorithm is doing to explain which stocks to pick. I'm just going to kind of assume that it knows what it's doing at this point because it really seems to know what it's doing, and just explain why you make money with this and what you can expect. And we'll talk about the market as a whole. So for the last few days, I've been up in my account balance. My account value keeps going up every day, by varying amounts. It was $640 on Tuesday, and it was about 100. I think it actually ended at only up $111 today. But I own a lot of options right now, and I own ones that are generally on this list at the top, at least were at the top when I bought them. I want to explain why this works and what you can expect from doing this. So, for example, we're trusting the algorithm here. We're saying, I have no idea who Walgreens Boot Alliance Incorporated common stock is. Not a clue. Didn't do any research. But what this algorithm is telling us is that it's only $103 to buy the options. If you don't know stock options, this isn't going to make any sense to you. So you have to know something about stock options to continue in this video and this podcast. But because we are really going to talk stock options along with theory about what's happening. But there's calls and there's puts, and you buy both of them, and it says it's only $103 for the option that ends a week from Friday, June 2nd. Well, let me give you the example because Sergio, I believe, asked in a comment, he's like, are you going to be putting the history in here of how these companies did so you could show how much money you made? And you cannot keep a complete history because a complete history has an infinite number of combinations of when you bought it and what the price was and what you sold it for. So the only examples I can actually give and know that they're accurate are the ones from my own account, because I know I bought something and I sold it. So I want to explain how I played Walgreens because it told me to take this on Monday, I believe. Monday, yeah, I think it was Monday it said to buy them. So I did. I bought them on the 22nd, which was Monday. Yeah, I bought them. I got a $31 strike price with them. Is what I got. They're currently at $30.93. Funny. I already bought and sold both of them and made money. And let's figure out how much money I made. When I bought them, it cost me $60 and $20 for a total of $80. So it didn't even cost me $103 because they were related to the 26th, May 26th expiration date, which is this Friday. I bought them on Monday for $80. By Tuesday, I was able to sell them for $87 and $30 respectively. That's $117. So what I bought for $80, I sold for $117 after all fees. I believe that is the correct amount. So that $37 of invested off of 80 that you make is a pretty good percentage. I mean, it's like 40% or something, right? It's really incredible. And so instead of just buying one for $80, I should have bought 10 for 800 and cashed out, $1170, right? Or whatever it is going to be. And so that's kind of the way you could play that. But it showed up on this list, even though it's a super inexpensive stock. They're only at like $30 a share. But what's going on is they're moving like more than $1 over a couple days is what's happening. And you can see they moved 65% of the way today, even though that direction was back toward 31. I think they had gone up or gone down. They had moved more drastically than this cost. So there's a lot of money to be mopped up in terms of profit when they fluctuate, not a very high degree, they got to just move $1 for some reason. And you're going to make money. They actually need to move $1.05 really for you to make money if you pay $103, because that's the way options and the price are related, is that $1 is $100 essentially in dollar movement of the stock price. So point is it keeps showing up here on top with an ABS rank of 2, which means it's still the top pick. And that's because 37 divided by 80 is pretty darn good profit for a day. That's why. Think about it. It was $37, right? Let me do my math again. My cost was 80 for the two of them, right? Not 103, but you probably could pay a little less now because another day has gone by. I sold for, looking at my computer, I sold for $29.34 net profit plus $87.34. $87.34. That's $116, right? So this 36 divided by your investment of 80 is 45% in one day, everyone. That's really what I wanted to make this video about, is I wanted to be like, am I really telling you to buy this $30 a share company called Walgreens Boot Alliance? And the answer is yes, because in one day you can make 46% on your money if you just sell when it goes one direction. And then, if it gets up, like it got up to like 80 or $90, and I was like, okay, well, I spent 80 for both of them, and the call had gotten up to $90. So I was like, all right, I'll just sell that. And then I can hope it changes direction. Then I can try to sell the put for even more profit. That's all I did. And I did it in less than 24 hours. It's unbelievable. I think it might have been 36. Actually, I think I might have made the second sale on today. I actually did. Yeah. I bought them both on. No, actually, that's not true. No, I did. I made both sales on Tuesday. No, I did this all in one day, guys, over the course of one calendar day into the next one, like that. Anyway, I hope that kind of gives you an example of why the algorithm is picking them by ABS number and it doing stuff like that. Now, in this case, the reason is this company is such a lower shared company that nobody's expecting they're going to move a lot. So the cost of their options are not very expensive because nobody's expecting this company to move a tremendous amount. So why would they overprice their options? Well, they're moving just more than enough to make it a really safe pick for like a week-long option. Like they're not having days where they're only moving 10 cents. They're moving more than half the direction they need to go each day, if not more. And that's why they're on here. So they're staying on here apparently. So I should continue to reinvest in this tomorrow for the option period that ends 6/2, because until they stop oscillating like this, it's free money every time they move around. And you'll see how fast it is. So that's a way we'll keep track of profits. We'll keep track of what keeps showing up on this list and whether or not we're having luck with it or not, right? And stuff that we purchased that did not make money. I'll know more on Friday when the week closes out if there are any companies that I do not make money on. I have a bunch of stuff still open, and that's why we're going to get into a theoretical discussion of why I have so much open right now. So I'm close to the nation's capital. I'm close to the nation's capital, and I see, we a lot of people that work within the government are from around the parts where I live, and it's part of your life. Like the news around here, the radio and stuff like that in the DC area, they have specific advertisements for like, government cloud computing solutions and stuff like that, because there are so many people that are driving to and from work that are in charge of those decisions that they put this kind of ads on the radio. It's a different kind of world here. And what I can tell you is that the news everywhere nationally is starting to focus on the inability of Congress and the president to get together and pass the debt ceiling adjustment, meaning, are we going to change the debt ceiling on the country so that we can pay our bills, or are we going to default for the first time in history? And nobody really thinks we'll actually finally default, because obviously legislation could be passed to raise the country's credit limit. However, for many reasons, the Congress, McCarthy, I guess it is, running the House, is hell-bent on taking it down to the wire and waving that threat wand out there. It's clear from the way that it's not done yet that it's not going to get done before right about the actual deadline of June 1st, which is what Janet Yellen has said. Whatever Janet Yellen says is good, apparently. So June 1st is the date that the S hits the fan, right? So let's talk about what's happening with the market, because there are some things that we can draw from this. For example, we're looking at all the activity of all the stocks this day. And it was 27% advancers, 73% decliners. It's a losing day, $500 billion down the tubes, $500 billion lost in value this day on the stock market. Well, when down days happen all the time, they usually happen at least once a week, sometimes twice. Well, what's going on right now is because there still is this question about whether or not they're actually, what kind of threats are we dealing with about not passing a bill or not getting something signed? Because, America's credit limit is, do we really care what America's credit limit is, honestly? I think we should pass a law saying we don't ever have to worry about the debt ceiling again. Like, we can just pass budgets and live our lives. I mean, if we owe 36 trillion to our kids' future, then we owe 36 trillion to our kids' future. What's the market cap of every company in existence right now? 57 trillion. All right. It's less than the global market cap, according to my calculations. Point is borrowing from your future is okay as long as the future is a place where you want to be. And while it is important for personal individuals to have credit limits, because only one person should only be so powerful, the government of the United States, it's still the best. It's still the best in the world, right? We're still the place where it's number one. American dollars are still the source of use in most other countries around the world as a base currency and as a reserve currency. America's still number one. And as long as it's a place where we want to be, it doesn't matter what the Federal Reserve does, the Treasury does, and they can create income by writing it, blank checks out of the Fed. They keep doing that and borrowing under the good faith of the United States government, and people will still believe it, and people will still cash those Social Security checks, and life will still go on regardless of what the actual trillions of dollars, or we're going to get into a number eventually when it's 1,000 trillion. That's another number. I don't know. What is it? A gigabillion or something? I don't know what it's called. I don't know what's after trillions. Gazillions? We could get into the gazillions. But if we do, so be it. That's not going to cause the end of the world. So if we want to keep our reputation as Americans, we should pass it. We should pass something and get that debt limit raised and hopefully obliterate it for all future Congresses so we don't have to worry about debt limits again. Like I said, just pass budgets. Just pass budgets. Don't worry about debt limits. That's all I'm saying. Now, that whole dissertation about what's going on it seems to be an issue because the threat of U.S. defaulting would be a stain on America that we have not done, at least in the near history. Like, no way. Like, I don't think in the last few hundred years America has defaulted on any debt to anybody like this. So if all of a sudden U.S. Treasury bonds and stuff like that, you wouldn't pay them out, right? Like those T-bills that you have, supposedly America might not pay them out if America doesn't pass a budget and doesn't spend money. Nobody wants to see that. It kind of seems impractical and ridiculous. Like, why do we want to just stop activity? So it is, in that sense, an empty threat by McCarthy and by the Republicans in the House, because nobody actually wants to go through with that and never work again. You're putting yourself out of a job, McCarthy. No more paychecks for you if there's no debt ceiling raised. It should really be like that. Nobody wants to do that. So it is an empty threat, but as long as he keeps posturing like this, it makes the market want to go down, because the more days that go by, and when the reality sets in that Memorial Day weekend is coming, I don't think the market is open on Monday. Let me ask Bing AI that, or somebody. Is the stock market open on Monday, May 30th?
According to Go Banking Rates, The markets will open again on Tuesday, May 30th for trading as usual.
Yeah, I got the day wrong. It's 29th, right? Monday's the 29th. Yeah. Good thing there's 31 days in May because then we don't default until what, Thursday or Friday? Yeah, Tuesday is the 30th, Wednesday is the 31st, Thursday is the 1st. So if they don't get an agreement before this weekend, which it looks like they are not going to have an agreement, because one thing McCarthy clearly doesn't care about is going right up to the wire of what Janet Yellen says. So you can expect nothing to happen until like the 31st. That's what I think is going to happen. And then they're going to be silly and they're not going to realize that they got to like move it over to the Senate and there has to be like another debate and it's going to be past the 1st, but there'll be this like couple days of America like hasn't defaulted yet, but we have kind of until they pass it. That's what I think is going to happen. I think McCarthy's going to bring it all the way out to that. And because of that, what happens in the meantime, right? You've heard the age-old adage about the market hates uncertainty, right? Hates it. Well, this is a big uncertain one. If America's all of a sudden not going to honor its debts and they're not going to pass the debt ceiling on time, that one causes hesitation, causes people to take money out of the market. Well, if that happens and we have a down day on Thursday, like we did today on Wednesday, well, let's discuss that. So I'm holding a bunch of stuff. Let's talk about all the cool stuff that I own and we will see what happens to it. So I'm going to go down the list until I find things. And then we're also going to talk about NVIDIA, which I believe went up 70 something a share after hours after they posted their earnings. So, wow. Good for them. If you don't have an option in them, you're looking at a $7,000 increase in intrinsic option value. Their options were extremely expensive though, and I'll show you them in a second. But let's go through the list. So for some reason, this Walgreens Boots Alliance, which is WBA, that's their ticker. For some reason, they make money. So we're going to stick with them. I haven't touched GM yet, but it says do it. Pfizer, I've done that and profited off that at least twice already this week. And I still own a option that expires on the 2nd, doesn't expire this Friday anymore. So we'll keep an eye on that. They're still awesome. Still have a low ABS number. Citigroup, I bought that today. Bought it right before the close. We'll keep an eye on it. Don't know what's going to happen, but they showed up on this list and I bought it. IBM, I have owned that since last week. It has been profitable and flirting with profitability all day on Wednesday. And this is where I'm going to get into tying this into what's happening with the debt ceiling in the market. So one thing that happened today is that everything that I had owned from last week that was coming due this Friday and stuff that's coming due next Friday on the 2nd, 26th and the 2nd of June, all those things, any options I had on them, the puts all of a sudden went up in value today because the market went down all over the place. That is noted here by today's 100% BEM number, boom number, I call it, which is how far did this company move in comparison to how far they need to move for you to make money by having one of the options turning into the value of more than the cost of both of them. How does that happen? It's when this number is greater than 100% or negative 100%. Either way, because you have a call that will help you out if it goes up more than 100% positive, and you have a put, which will help you if it goes down 100% negative as far as it needs to go. Well, I have calls and puts on all these companies that we're talking about. I already made money and sold my Walgreens, but I should apparently buy more. Pfizer, I did the same thing, but I also have some. Notice they moved half as much as they need to move today. They went down. Notice all these numbers are down. Every single one of these companies, except for Kroger and ExxonMobil, look at all the top, all of them moved in tandem. That's a lot of down. That's 15 downs in a row. Top. Okay. Well, we don't care with the straddle strategy, whether or not it's up or down, as long as it's the same direction. Well, why are things going down? Because of uncertainty with debt ceiling is one reason. And people pulling money out of established companies simply in fear of a drastic market drop if the threat of not really raising the debt ceiling is real and it comes to fruition. Well, guess when this super antsy time is? It's now. Like if you think that this is not going to get solved and you want to pull your money out, when do you have to do it? You have to do it Thursday or Friday, because if you wait till the market opens on Tuesday of next week and you sit and watch it go down today and Friday, you're hating yourself, especially if there are big drops. What do I think is going to happen? That there might be some big drops, because this is a scary one. This is one where values of everything change drastically in the market if we don't raise the debt ceiling. That's actually the first place you see the impact, because all of a sudden all the T-bills and everything get reevaluated because there's going to be a new credit rating assessed to them, because you're going to have to note that America defaulted this one time. And why would we do that to ourselves? Good question. Makes you think that it's really silly to do that, but you really don't know how much the threats are real. So all these things going down, there's a chance they're going to go down tomorrow too. And I'm holding a ton of these puts right now, assuming that that's probably going to happen. Because if I'd sold them all today on Wednesday, and then they go down like crazy tomorrow and Friday, I missed out on a lot of profit. Like there are not a lot of signs that the market is going to all of a sudden turn around before the end of this week. Everyone's going to be super confident and dumping a bunch of money into stocks again. That is not the sentiment that is flowing around right now. It's when are we going to get the debt ceiling covered so that we can go back to thinking about, world after that numerical problem is taken care of, and not taken care of the next few days means the market's going to go down. There's no other way it can go, right? Why would you dump money into this market if they don't get anything done? And on the off chance that they come to an agreement before that, and I'm wrong about the posturing, and for some reason McCarthy moves on something and they pass something that can be agreed upon so that at least the debt ceiling can go up, even if that happens, the reaction to that would be a relief, which would bring money into the market, but that would be such drastic changes in stock prices that they would probably flip completely in the other direction, and all the calls that you owned on these companies would become valuable out of nowhere. They would rise from the dust of being worth nothing right now to being profitable sales by Friday, because the drastic changes for these companies would be that much so in the other direction going up. So straddling the stock by having a call and a put gives you both scenarios that are likely. The only scenario that would have caused me to sell a bunch of these today, and I'll get into what I do own Delta, by the way. And let me show you who I own, but I just wanted to give you my principle about why I kind of think Thursday and potentially Friday as well are really big days for potential activity. And it sides on being on the downside, as people don't want to risk their money in the market not knowing what's going to happen and decide to get onto the sidelines, at least for the next week, until they get the debt ceiling thing figured out, if they don't get it figured out by Friday. So every minute that goes by, they don't get it figured out, the market's going to start dropping. You're just going to be able to set your clock to it. So we'll see. Now, who do I own? Gosh, all right. Bought and sold and still own. Own Citigroup, own IBM, own Verizon, own Starbucks, own Delta, own Exxon, own Target. This one I paid something for because I smelled craziness going on here. The right is also attacking Target for some reason. Also, like there's a weird Facebook meme type boycott thing going on with them. So watch out there. eBay, I own that. These are all things that I own that expire Friday, I believe. Yeah, a lot of action, because all this stuff was down and it was like almost profitable, but certainly not very profitable yet. And so it's kind of like, what do we do? We're gonna see if things continue to go down on Thursday. Don't own that. The Anheuser-Busch just keeps going down. Poor company. What else do we own? No. AbbVie, I made money on already. I actually still own one half of an option. I own like a call or something. Yeah, I own a call that's pretty much worthless, but I profited already on my put on AbbVie. So I did own AbbVie this week and profited. No. I should buy Google though. I own MGM. I own only a put in Amazon because I'm an idiot. I own Wells Fargo. I never got in on that Twilio thing, even though Twilio crushed it. The algorithm picked it off like 2 days in a row. I never touched it. I own T-Mobile, yet I've already profited off T-Mobile this week. And the only thing I still own is a put on them. So if market drops drastically and T-Mobile drops, I make profit on both my call and my put, which would be really incredible. I don't think I've done that yet, doing this. I've cashed out calls and puts, but I've never profited on both in the same week. Meaning like you caught the trends so well that you sold one at a huge profit, and then the things switched back. They completely flipped in their price, and you were able to sell the other one also at a profit before the end of the week. Have not done that yet. I sense there's some potential in doing that with T-Mobile because I have like $138 put, I think. So they're at 140 or something. It's possible. What else is there? I want to buy a lot of this stuff. I just haven't bought everything yet. I had P&G and I made money on them already. And I'm still left with a call that's basically worthless. But I made money on them this week. JP Morgan, I have them. That one is a very interesting one. I paid $340-ish, I think, for my JP Morgans that expire Friday. And I've got them around the $38 or $39 strike price. I'm sorry, 138. I think I have them at a 138 and a 139. I think I have two different ones. And that's very interesting. So if there is a drop and it takes JP Morgan with them, that one pays very well because debt ceiling default talk could bring them down significantly compared to how far they need to move. Like they only moved $1 down today. They can move a few dollars in a day if there's more bad debt ceiling news. So that's an interesting one to watch. And that's the one that I think that potentially has the most profit potential of the ones that I own. Because I didn't spend a lot on them. I don't like spending a lot for that muffler. I want these numbers to be really low. The lower they are, the less risk you're taking. The fact that you can get this for like $80, a little less than this 103 is amazing because you're talking about ranges of $1. So we're talking about 80 cents that they have to move. I know they're only a $31 a share company, so that's not, that's a lot for them, I guess. But they keep moving like this, so it's saying that they will do it. That's why they're up here. What else do I own? I don't own United. Don't own this. Don't own that. I thought about buying this Nutrient today, but I didn't do that. Didn't get in on Twilio. Have T-Mobile. Had P&G and made money. Have JP Morgan. I didn't get in on the Foot Locker, even though I talked about it. And what did they do today? They drop again? Yeah, they just keep going down, right? $26. Yeah, they're just falling apart. Just like their shoes, falling apart. That was one that was on top of the list and keeps making money. That's kind of a way to look at that. PayPal I had last week and barely lost a tiny bit amount of money on them. Roblox I have own that one. They were up today. They're one of the rare ones that was up today. Okay, so had that. I wanted to get in on Nike, but didn't do that yet. Moderna, I'm thinking it's too expensive, but they're an interesting company, which I'll talk about in a future video. Don't have any of this stuff. I'd like to get in on Home Depot, but it's really expensive. Wow. I wonder if they got earnings coming up. When a company has earnings, they can do crazy things. Palo Alto went up a lot today. That was the other big one that went up. $1,500 options. They moved by $13 a share today. So they didn't even move by what they needed to move by, if that's what the cost of them was before their earnings. AMD, I didn't get in on this week, but I should. They didn't move that much today, but I'm sure they moved around today. Notice these numbers, these ABS rank numbers are not great, so wouldn't really recommend all these. But the truth is that this strategy works for many, many companies, even when you make bad decisions, because sometimes they're just going to move so much that you can't lose. And when the market in aggregate all moves down and it affects every company 2 or 3%, just you, by nature of you owning a put in all of those companies, you just have no choice but to make money. And that's kind of the theory behind this. I want to buy some Apple, but I haven't done that yet. Don't own any Tesla. Super expensive Tesla. Super expensive. Don't see too much more that I own. And I mean, NVIDIA, I wanted to talk about before this is over, because them moving 70 something dollars a share after hours is insane. I mean, they're moving from like 300 to 370 after. That is, here we are. Says that they're at 391. That's what they closed at. Let me look really quickly at what it says actually, on the stock website, because I looked at my phone, I couldn't believe what I saw. So it says 305, but it's going for 380 right now, meaning after hours it's up at 380, guys. Do you know what that means for options? This is a really interesting thing to look at. So basically, what you have here is before I recorded this before they announced earnings, because they announced earnings after hours. It was 20, call it $2,500. It was $2,500 for you to buy the options that expired a week from Friday. Well, they're moving $80 after hours, meaning $8,000 in intrinsic value before you even get to Friday. We'll see what they actually open up at, because sometimes it's distorted after hours, because even though they're going for a lot more, they might not be going for 380. And I don't know if you could actually sell the option for $8,000 right off the bat in the morning, but that's what it would have been. Your call would be worth $8,000 more than you bought it for. And you'd be up at least like $6,000-ish probably. And that is what options can do for you. They're really expensive here, and that's a huge, huge jump after hours. I mean, 80 divided by 300 people, like, yikes. Like, that is like a 23% increase in value for the company. And after hours, I mean, I know they're a great company, and they are leading the AI processing revolution. Their chips are expensive, but people need them. Like I think they're world class. They are the best. So they're using that, and that is the future. And there's just this pent up, bullish mentality for them. I understand it, and it just blew them through the roof at 380. That is nuts. Nuts. So we'll see if that's what it's actually going for in the morning. But that's the kind of stuff that options can just do for you. Oh yeah, we'll end on this. So I didn't do the strategy on this company. Okay. I want to talk about this company because I saw this and I could not understand what was going on. So as I sneeze, there, one more. All right, here we go. Sorry for that. We're looking at Reata Pharmaceuticals, and it's saying that they moved $15.70 today. All right, folks. They were a $79 a share company to start the day on Wednesday. Yet somehow they blew it more. I mean, on a day where everybody got screwed, this company right here had an amazing day, up 19%. I mean, if we sort all the companies on the market, which will have all stock values, at which one went up the most percentage, which is an interesting way to look at the market. We'll do descending by percent day change. They're going to be close to the top they're going to be, well, actually, some of these penny stocks go up. I want to put a market cap filter on here, meaning that the market cap has to be greater than 1,000 million. Means it has to be $1 billion company or more. Just want to see where they appear on here. They're number 2 behind Abercrombie and Fitch for some reason. It went up 26%. But here it's $15, which is $1,570 in intrinsic option value, right? Well, I saw that and I was like, what is going on here on this day when so many companies went down? Why? So I looked them up, and they are not a profitable company. They are not a profitable company at all. They do not fit any of the reasons why I would say this is a good company. They're a biopharma company, yada, yada. Their income statement is always negative. They're hardly ever making any money. Okay. And the news article about this company said that the executives were under investigation for securities fraud, or they were notifying people about securities fraud being done by the executive or something. And there was the lawyer that was a New York lawyer that's kind of famous that was doing the thing. I saw this. I was like, this is not good news. Why on earth is this company going up like crazy? Makes no sense. No sense whatsoever. Now, seeing this kind of ridiculous movement makes me think there's going to continue to be some type of ridiculous movement on this company, because as you can see, when it comes to like day changes, this is very, very abnormal movement. That's a lot. That's a lot. It's increasing their market cap. Actually, I want to just do the numbers on that. We can see, like, because it tells you what this company is worth. 3.5 billion. I mean, we're increasing that by a quarter. We're upping it by like. Did something happen that was a $700,000 million event or something? I don't see it. I just do not understand. So what I think is going on is some funky business. It just looks like funky business. There was no reason why they went up. If you look, there's no little note thing. It's take a reason why this company went up. Just makes 0 sense. So what I think is happening is, for some reason, it got super inflated today. And while it can continue to get money pumped into it to try to keep inflating it, that's not usually the way things go when there's not anything substantial behind the inflation. And so a company that's losing money and not bringing in enough and spending way too much, all of a sudden having this kind of jump, I don't know what news I'm missing or whatever, but I just bought one put on them. I spent $150. This is my guilty pleasure. I do not recommend doing it this way. You're supposed to buy it both ways. But I just said, there's no way. There's no way they're going back up. I go, this coupled with the tide of the market uncertainty with the debt ceiling stuff means down, down, down. And I expect them to drop like $6 a share or more by Thursday or Friday. So I was like, I'll spend $150 on a put here and hope they go down. Now, that is not the straddle strategy. I really should be buying a call on them also. But I refuse to buy a call on a company that's executives are being investigated for securities fraud. I will only buy puts when I see that kind of news. And so to see them jump up so berserkingly means that, yeah, they're probably going to go down. So we'll sit back and we'll see what happens there. But I wanted to explain that one because you can see how low it shows down here. It's got a terrible rating because it's super expensive, but it's also ridiculous. And I don't know how to teach the algorithm to read into outliers like this, because we really want to look at the order of the day like this, which is, this is the list of all companies and how far they moved. Like, you can kind of look at the same thing here. The boom numbers. See, they show up at the top here as well. That's how I knew Palo Alto was at the top, right? Twilio again, doing well. So this is an interesting way to look at it as well. But you also need to pay attention to this number, because the truth is we don't know what's going to happen here. This is not reliable. This is a weird, abnormal day. And while it's a good idea to get in on abnormal volatility as long as you can get in cheap, because notice how cheap we get in with a lot of our companies. Because remember, we're talking about the variance around a strike price. So if you the lower you pay, the less inherent risk you are applying to the investment and the option purchase, because they're always going to be at a number. So they're always going to be within 50 cents or $1. They're always going to be within a penny or $1 of whatever your strike price is for one of the options. So if you only have to spend 100 for both options, you have $1.03 range that the company is in, where you can only make a slight profit or lose a little money. Anything outside of that $1.03 range, you have to make money intrinsically. That's the amazing part of it. That as long as Walgreens goes below 30 and above 32, basically, you're going to have to make money on these options. And they don't even have to. Sometimes you can make money even if they only go like 75% of the way there and then switch direction and you sell at the right time. There's so many ways to make money and so few ways to lose money. They have to just stay at your strike price indefinitely until your option expires for you to lose. That's the only way you really lose, and you still don't lose 100% of your investment, because you always have the ability to sell at some premium included in the price all the way up to the day that it's expiring. So this is really just the best thing I've ever built for making money, and I expect this thing to continue to work. And for those of you who are interested in stock options, this is the coolest thing that you'll see when it comes to telling you an order of companies to buy and how to play them. And so I gave you the list of the ones I'm playing. I'm just expecting everything to go down tomorrow. If everything goes down tomorrow because of this uncertainty nonsense, then I'm trying to think how much money I named, at least 10 companies there, right, that I own. If everything drops 3% and it's a buck, $2, $3 for those companies, I'm looking at making well over $1,000 and maybe even over $2,000 if everything drops by like 3%, which is possible when it has a bad down day because of this. That is hilarious if you think about it, because we've got both sides of the option. So we didn't do anything special, but we just ended up running into a week where there was bad news after bad news that abnormally causes people to draw money out of the market and artificially deflate market caps and investments in equities, because of this really weird uncertainty that we haven't gotten this deep into this before, and nobody knows who's bluffing and who's got blanks and who's going to fire. Nobody really knows. So that is creating extraordinary losses, which creates extraordinary profits for all the puts that you own. And that's the way you play this. So all that being said, just in summary, yesterday I told everybody Starbucks was number one. I own Starbucks, and they only moved 25% as much as they needed to move today, about 73 cents. Okay, have it till the end of next Friday. If they keep going down, and keep in mind, they only need to go down like $2.62 for you to make money on these. We'll see. Or they need to go up $3.48, whatever. All right. So that's going to be the podcast. I know it's long and drawn out in a lot of ways, but for those of you who care, we all need to look for different ways to make money. This is what, all those people that have a lot of money on Wall Street that are trading, managing hedge funds and doing all this type of work. You can see why there's so much random money to be made just mopping up profits due to variance and volatility, let alone all types of other reasons that stocks might move. So this is helping you identify where those deals are and where you can take advantage of even normal volatility, let alone abnormal volatility, which will get you profiting even more. All right. So Good luck, everyone. May all your trades be volatile tomorrow. I don't want to root for people to lose money, but I am rooting for the market to go down Thursday and probably Friday too, assuming that is because there's just no debt ceiling negotiation and no real other reason. And hopefully that will get finalized next week and then the market can get back to normal. But as for the rest of this week, it's tough to find reasons to think the market that goes up. Only if you believe our government is functioning and working well and people want the rest of us to not be super anxious, then the deal will get done. But who knows? Maybe a bunch of people that are shorting the market are paying off the Republicans to draw this out because they know it'll bring the market down. Who knows? I don't know the answer to that question. I know it's one of the reasons why, congressmen trading stocks is kind of like insider information violation, basically, because when you can make the news, you can determine a lot of what happens in a short term to the stock market by the way people are going to react. So we'll see what happens. I'll be back tomorrow. Be back on the 25th at night. We'll see if everything went down and the account balance went up. We'll find out. All right. Good luck. Like I said, may all your trades be volatile. May all your profits be bountiful, plentiful, and everything else.